You know, the number one question I always get as a top end financial person is how do I reduce my tax bill? And for many years, I didn't have any answers other than what everybody else has. And I was fortunate to run into an idea that many of our clients have used for several years. It's a proven program that's tax compliant. And as you'll see from the real world examples that I'll share towards the end of this program, it cuts tax bills 20 to 40%. And it is an incentive devised by our government, and it works just as advertised. And I am fortunate to have ran into the experts in this area that have an impeccable track record. So I'm super excited to bring this information to you. And with that, let's get this thing started. Before we get too far along, let me point out who the ideal candidates are for this type of program. First of all, the income level has to be at least $500,000 a year, must desire lower tax costs, and must be financially savvy. And by that, I mean committed to financial success and already taking steps in that direction. What creates these deductions is what's called conservation easements. They are an incentive by the government to help protect land from being overdeveloped. Now, it's covered by the Internal Revenue Code, and it was first enacted in 2006 and then expanded and made permanent in 2015. Now, conservation easements are not something that's brand new. The first one was done in Boston in 1891. In 1976, new tax reform at that point in time allowed landowners to start reporting easement value as a deduction. By 2006, they raised the limits on the deduction, and by 2015, they enhanced it even further and made the law permanent. At this point, you're probably thinking, hey, I don't own any land. I'm not a farmer. I'm not a big landowner. How could this help me? Well, the team that we've assembled actually locates viable properties, and they have third-party appraisers that come in and determine the value as the land is today versus what it would be developed. And for the best opportunities, they secure the properties and take care of all the details, including dividing them up and allowing multiple people to take advantage of this deduction. Now, when I heard of conservation easements, I only wanted to work with the best of the best because my clients count on me to find solutions by the best. And this team's track record is second to none. They have over 10 years experience in conservation easements, 107 different properties that they've worked on, hundreds of satisfied clients. And as you can imagine, this is a program for high income, high net worth clients that get audited from time to time. Well, 5 of the clients actually did get audited, not because of this program, but just because of their total financial situation. And in those audits, it actually tested the backbone of the program, if you will, and it resulted in 0 changes to the deduction from the conservation easement, which proves that A, their appraisals are accurate, and B, that it stood up to IRS scrutiny, which is very powerful. California, taxes can be very daunting. It's one of the highest tax places on earth. every dollar earned above 467 is taxed at over 50%. And the reason that's relevant here is that getting large deductions like you can get inside of a conservation easement takes the top dollars off the table, meaning we're in a progressive tax code, and the more you make, the more the tax rate. And an example would be somebody making $1 million and getting involved with conservation easements and being able to deduct $500,000. That means they'd only be filing on a 500 and taking their other deductions and so forth off of that. They would not be in the top tax bracket. So very relevant. Also, with the new tax code or new tax law that just passed, the state and local tax deduction has now been capped at 10%, which is going to cost a lot of Californians a lot of money that they used to be able to deduct. Next, potential for single payer health system. If you've been reading or watching the news on this, the cost, if that ever gets passed, is going to be tremendous, and it will be passed on in the form of taxes to people that are making good money. And finally, state pensions. I did some research and a couple weeks ago found that 2 of the state pensions are $206 billion underfunded right now. So it's never been more relevant, especially in California, to protect yourself from high taxes and the tax authorities any way that's, obviously legal and puts you in a better position. Now, some important points to cover here are the team we assembled actually customizes the deduction amount to your particular situation. And this is meant to complement your tax planning that you already have in place. This is designed to maximize it and make it way more effective. Now keep in mind that you can only deduct through a conservation easement up to 50% of your adjusted gross income. How is the deduction actually valued? What you do is you take the developed value and subtract the undeveloped value, which equals the deduction amount. An example would be you have a piece of property worth $1 million, and if you put an apartment complex, now it's worth $5 million. In that example, as you can see in the green, that would create a $4 million deduction. Now, a lot of you watching this don't need a $4 million deduction. So I'm going to continue on here, and for most people, they need a different level. Well, in the example that we just covered, each dollar into the project will actually create a $5 deduction. So $100,000 in would actually create a $500,000 deduction. And a $500,000 deduction on the taxes at 50% tax rate would create a $250,000 tax savings. And this is not including the cost for the team and all that, but that will be included in the examples that we're getting ready to cover. The point is that you understand that the properties are actually broken down into pieces, and the deduction value is basically a multiple of the developed versus the undeveloped value. Okay, now the fun part. Let's look at actual clients. What were the real results with conservation easements? Now, the first couple came in, they're a couple from California, and their gross income was $636,000 a year. And they had a tax team that they had worked with for years that they really liked. And with deductions and everything, they ended up with an AGI of 541. Now the big difference you can see once they applied a conservation easement is their adjusted gross income went way down to $250,000. Instead of $541 that they're paying taxes on, it dropped to $250,978. Dropped their tax cost from $210 to $142. And this little asterisk, this includes the cost of everything. Getting involved with the program, tax bill, all of it. We just call it all the same. It's all tax cost. So as you can see, a significant change of net income. 425 versus 493. For this couple, they ended up saving a whopping $68,463 in tax cost. And this is in the pocket money. Can be used to expand their business. This can be used to fund a retirement. Whatever they want to use it for, this is net of everything. They saved 32.48% of their total tax cost. If you break that down per month, they saved over $5,700 a month, or $17,000 per quarter. You know, they pay their taxes on a quarterly basis. This saves them $17,000 per quarter just by using this conservation easement program. All right, now let's look at another couple here in California. Gross income, $1.2 million. Their adjusted gross income, as you can see, without an easement, tax cost, net income, $685. With an easement, AGI dropped substantially, and the net income was much stronger. Again, just using a legal strategy that now, because of technology and environmental and social drivers, is now available to a larger audience than just farmers and large landowners. This couple's net savings is almost $10,000 a month, or $30,000 a quarter, and saved them a total of 23.25% of their total tax cost. And again, that's all in. Okay, for our third example, this couple has a gross annual income of $4.95 million. You can see their AGI without an easement, total net income, $2.550. With an easement, dropped the AGI significantly and created a much stronger net income. So all told, this couple ended up saving $511,000 off of their tax code using conservation easements. And believe me, this couple has an incredible tax team, but $511,000 saved. That's over $42,000 a month, or $127,000 on their estimated quarterly tax payment. That's some powerful dollars that they can use to fund other vehicles or build their business even stronger, or fund projects that are important to them. Whatever they want to do, this is their money, and those are real dollars that are net of everything. Now, the next biggest question I always receive, other than how can I lower my tax bill, is once people see this, is why haven't I heard about this from my CPA or my tax team? And there's a few reasons that could be. One, it's a unique program done by Specialist. But number one here, you probably don't own land that would qualify for it anyway, so it's not something they've ever even looked at. Up until, teams like we found, this isn't something that's common. It's something that people have to specialize in. And number two here, doesn't have the experts to manage, to secure the property, to actually get it set up correctly, and to make sure that it's IRS compliant. Almost no tax firms that file taxes have the resources available for this type of program. But once the team that we've assembled puts it together, the process of entering it for them is very simple. And number three, they may just not have enough high income clients to justify actually becoming super educated in this program. I know when I first saw it, and I work only with high net worth and high income clients, I went into about a year and a half study to make sure that it was legitimate before I would show it to anyone. And most firms, be it tax planning or financial planning or both, don't have a large group of high income, high net worth clients. They have a few, and you might be one of the few. So they're not going to go spend a bunch of money getting trained on this or seek out these resources. So that's usually a possibility. And number four, it's kind of like expecting the family doctor to treat cancer. I mean, cancer is its own specialty, and you seek out people that do only that. And so most CPA and financial firms, they're really good at what they do, and they leave the specialty type programs to specialists. And so that's the main reasons why you would have not heard about this from your CPA or your tax team. So what does it take to get started with this, to learn more about it? Well, here's the requirements. Copy of last year's tax return, your expected annual income for 2018, and as we had mentioned earlier, a minimum annual income of $500,000. And as you can imagine, this is a super powerful program with very few providers, so we do have limited availability. So the quicker that you get involved, the better for you, because we do have limited spacing. Now, if we run out of spaces at the current time, the team is always out looking for new properties and so forth, so you would go on a waiting list. Now, before you would ever actually get involved with this, we want to make sure you're right for the program, as I'm sure you want to know we're right for you. So as a new person coming into what we offer, we actually go above and beyond and actually have the CPA and legal team review your tax returns, your business taxes, your research and design tax credit assessments, your long-term capital gains deferral assessment, your wealth and retirement health, and your corporate entity and protection. And we do all of this, the team does all of this at no cost to you, because through doing this research, we can A, show you the type of skill and value that we bring to the game, and at the same time, we can make sure that you're a perfect fit for what we do. And when we first started doing these, I wondered, because most of our clients have extensive tax and legal and financial representation, whether this would uncover anything that could be an opportunity for our clients, or if it would just be doing the process, if you will. And in almost every single case, the team found ways to improve the current situation beyond the conservation easement. Now, some of these may not apply to your situation. If they don't apply, then obviously they won't be done. But for the things that do apply, this is like receiving a third-party analysis of your situation. And again, this is for people who are committed to financial success, that want to work with top-end advisors and want to surround their situation with the best of the best. So all of this is done beforehand. And when you get your proposal, if you will, it will actually show you exactly what can be saved, what can be done. And not only that, the results are then guaranteed. They are guaranteed. It's not something where we're guessing at what the results will be. The results are guaranteed in writing. And if there was ever a chance where the numbers were different after the program was installed, then the team that does this actually guarantees the work and would pay any cost associated with the difference. Like I said, when I first learned of conservation easements, I went out and found the best of the best. These are the guys that other people that call themselves experts call because they want to know when they have an answer they can't answer. So these are the best, and this is way more than just a conservation easement. This is comprehensive, advanced tax planning. Okay, so that is the end of the discussion on conservation easements. And if you like what you've seen, if you want to find out if this is something that would be great in your situation, then what you need to do is, number one, fill out a brief application and submit that to us. And what we'll do is review that application, and we're looking for the people that are the best fit, that this is going to make sense, that this is going to put more dollars in their pocket, and that they look like a good fit for what we do. And we will contact you either way to inform you of the decision we've made. And if at that point we've decided to work with you, at that point we'll start putting together a program. If for some reason we do not want to work with you because of something on the application, we will either A, refer you to somebody who we think would be a better fit, or B, inform you of some ways that may help, that would help you in some way. We'll help you in any way we can. So that is our process, and we try and keep it as streamlined as possible. If you don't hear from us immediately, it doesn't mean anything. It could just mean that we've got too many applications to go through, but we will be in touch with you as soon as we possibly can. So with that, I appreciate your time, and thank you very much.